Good evening, everyone, and welcome to tonight's Capital Growth Live Trade Room. My name is Tim, and I'm happy to take you through tonight's webinar. So we trade the markets with live capital every day, and what we simply look to do is bring you our findings as we look for high probability trading opportunities across the world's largest markets, from your foreign exchange markets to also your commodity markets like your gold and your oil markets, and also global indices like the S&P and the FTSE. Okay, so let's get straight into tonight's webinar then. So, of course, please take a brief moment to familiarize yourself with our risk warning currently up on screen. And in terms of the aims behind this particular session is to, of course, look to trade these markets and look to capitalize on major market moves and daily timeframes. We do appreciate many of you guys have you're very much preoccupied during the day, so this is a useful solution to learn how to trade, get that experience under your belt, understand what's going on at bigger time frames, and then what traders often do, and certainly we would be advocates of it, is then take the steps into your more dynamic, very much more volatile price action, which you will see on the smaller time frames. So all of these things are important, but what we want to do is to improve your trade and decision-making skills. So whether it's a winning trade or losing trade, we want to analyze what we did, how we did it. Sometimes, we can take a losing trade and we can literally say to ourselves, is there anything we could have done differently? And on occasion, and more often than not, the answer is no. It'd still be a trade that we would look to take on a consistent basis. So there's a lot to be learned from that. But our approach has a really strong emphasis on capital protection, and not just in the basic understanding of the term, protecting your capital during choppy, difficult market conditions. Effective risk management, it extends across kind of the whole spectrum, from the size that you're trading, the amount of capital you're contributing to that trade. The placements of your stop loss has an element of capital protection built in. Your ability to assess market conditions and understand actually that on occasion it's actually preferable that you as a trader may step back from the markets, which is effectively what we've had to do today. And I'll explain a little bit more detail shortly, but all of these things can add to effective capital protection. Because if you're getting into trades because you feel the need to trade, or you feel the need to push the button, and perhaps the quality of the setup is not great, then you're entering the sort of the gambling sort of area of these markets. And of course, there is traders that come into these markets and that's all they do is gamble. They have a subjective opinion and they want to put money behind it, and it may or may not work. But that's really not what we're advocates of. We're advocates of knowing what you're doing, and most importantly, why you're doing it, within a kind of a structure that you can learn. So stacking odds in your favor. So these are the things to consider: your ability to assess market conditions. Today as we've seen quite choppy market conditions for the majority of the trading day. We've seen some accelerated moves in the last few hours yet again, which is a little bit frustrating, but been an indecisive day. And really quite choppy. And the reason why we're of that opinion is because we can look across the currency markets, the indice markets, and also the commodity markets, and you can see the correlations between some of those markets. And if they don't stack up, then it just leaves us needing to be perhaps practice aspects of being patient and just waiting for the setup to arrive, and not really force it. So for example, we've seen quite a few breakouts today in either direction, to the upside or to the downside. And of course you can trade the breakout, but what we often do is wait for the pullback. And if that pullback doesn't come back to support or resistance and look to consolidate and give us that opportunity to take that trade to the upside, then we're going to be patient. So we often get those pullbacks that go way past the levels of support and resistance, and it flies 20, 30, 40 pips lower. And as a result, that's no longer a viable trade for us. So we end up backing off. So we've been in that position quite a few times today, and we do get trading conditions like that on occasion. Stack the odds in your favor, support and resistance, Japanese candlesticks is quite an easy to identify and hopefully very easy to understand the trades that we get into and why we get into them. We're very proactive with actively managing the trade itself. So if the market moves in our favor, we're very good at taking risk off the table, and then we're in a very good psychological place to see the growth and to hopefully see that trade kick on. And what we're looking to do is to cut our losers short, but let our winners run. And really what we talk about when we trade is, can you be consistent in your entries and your stop loss placements and your ability to take profit? Because if you can't, and if you can answer that question honestly, then you probably are going to find it quite difficult. And this doesn't matter what approach you use, in our opinion. Consistency is a really, really important skill. Discipline with regards to your capital. If you are committing a 1% trade, but you look back over your trading terminal and you see, well, actually you were trading 2, 3, 4%, but you weren't really aware of it, then that effectively means you're oversizing, and that has a direct impact on your ability to effectively manage risk. So all of these things are important, and patience as well. Sometimes it is better to sit in your hands rather than to get involved in a trading day like today, where you could have easily taken 1 or 2 losing trades today, but because we backed off, we save our capital for slightly better conditions. So let's get straight in. We'll review market moving news. We'll amend our current trades. We'll review the remaining charts, see what opportunities exist, and look to get into them before we finish. So everything will be concluded normally within 30 minutes. Okay, so let's start with Forex Factory then. We'll just have a quick overview of the news. Again, a lot has happened over the course of the day. We spoke about yesterday the manufacturing services PMI data, and I suppose it's quite easy to see that we've missed forecasts, so that's really not great. And we're in a steady decline now, as you can see from this chart, with German manufacturing. So it is quite important. It is what led to the sell-off that we've seen in the euro today. But we've had other significant events as the days unfolded. We've had Boris Johnson be ushered into number 10 Downing Street as the new Prime Minister, and we've also said goodbye to Theresa May. She's heading for the backbenches now, and we've had a significant number of cabinet resignations. So troublesome times ahead, although some of those resignations you probably would have suggested that there would be a few, probably not as many as there's been, and that becomes a bit of an issue or a bit of a problem. Maybe Boris has orchestrated it. Maybe he basically said, look, you resign before I push you out. We really don't know. But what's for sure is he is going to be looking to put a series of Brexiteers in very prominent positions and look to renegotiate with Europe from there. So it's going to be fascinating to see how this is all going to play out. It's probably going to end quite badly, depending on your views over the last 3 years. So as a result, the manufacturing PMI and services data is heading lower. That is a bit of a concern for the ECB. However, things on the US are looking a little bit rosier. They're looking a little bit more positive. So we've had like a positive. If you look at the S&P 500, we've had in the end quite a decent positive run today, heading towards all-time highs once more. And now there's a bit of a question mark in terms of how accommodative the Fed are going to be. Towards the end of this month, we'll have the FOMC, and we'll have some decisions there. So there's a little bit of, it's going to be interesting to see the price action now over the coming 4 or 5 days, especially in the markets like your US equities. Okay, so just to touch upon some news events that we need to keep an eye on. If you're trading the Aussie dollar, do be aware that we'll have the governor of the RBA due to give a talk. Now it's a speech, so shouldn't be overly concerning for the markets. The major news tomorrow is the ECB, and again, a lot of that. Oh, hi guys. Hi McDonald. Good to have you with us. We've not seen you for a little while, so I hope you're keeping well. There's nothing showing on the screen. Everything seems to be fine on our side, McDonald. So maybe it's a case of logging out and logging back in, or could you double check your own internet connection, because that may be the issue. But we think everything, oh, it's showing now, good. So that may have been sort of briefly. So look, we're back on track, so that's great. So we've got the ECB tomorrow, major news event. We are expecting a little bit more dovish, more of a dovish approach from the ECB and the outgoing Mario Draghi as well. We've got rates at 0% now. There's no, the markets don't necessarily anticipate that there's going to be a rate cut tomorrow, although of course we never know until the time is right. But what we're seeing is the need for the ECB to be leaning towards becoming a little bit more accommodative, and the suggestion of negative rates is now floating around. So we've got this basket of mixed fortunes between now the Eurozone, who having to deal with Brexit and other internal issues in Europe, versus a relatively buoyant US economy on a pound-for-pound basis. So it's going to be interesting to see. So if you do get into any euro-related trades, and we were very, very close to getting into the euro-pound today to the downside. I suppose the only reason why we didn't, we had the technical setup. It's just the fundamentals and the sentiment was very, very confused. So you know, we needed to just exercise a little bit of caution today. But now tomorrow, if we get some kick on and we get some extension, then you can trade with a little bit of sort of recent price action under your belt. So a little bit more confidence going into tomorrow's trading, often when you get days like this. So let's see if we get some follow through there. And the only other news on Friday is advanced GDP. So we can talk about that briefly tomorrow. So all eyes on the ECB tomorrow. Okay, so let's get in then and we'll discuss these trades. That's a little bit of a handle. Ongoing tensions in the Middle East with Iran as well. So bear that in mind for the oil markets. So we were able to capitalize on a good trade yesterday to the downside on our swing trading platform. The only thing that was preventing us from getting too excited today was the fact that there's strong support just at these very marginal lower levels. So certainly from an intraday, or sorry, from a daily time frame perspective, we want to be getting in below that level rather than getting in just above it. Although if we get a good strong break low to monthly low, the let me see what price this is, the 1106 or the 1100 level, then this is really it would signify a really strong trade. We've got a nice bit of air beneath this level. We would expect these prices to continue lower, so we don't need to be too aggressive above this level, and probably a little bit more aggressive after that we break this level to the downside. So it's setting up quite nicely. It's exactly the price action we'd like to see, and let's see if we do get those opportunities in the very, very near future or not. Okay, so let's flick through some of these. So we're still in the pound yen, although for all intents and purposes now we can probably look to get out of the trade. We were very close today, so we had a high of this market of the 135.27 level, and our stop loss is at 135.34. So our stop loss is just above today's high, and today's now we've got a bullish candlestick, and now the sentiment could be changing quite considerably for the pound. Although you wouldn't look at that, or you wouldn't come to that conclusion by looking at the pound dollar. we would have expected this to have kicked on, and it never really did. So we've had a bit of a pullback just back to yesterday's high, actually. So that's quite interesting from a price action perspective. But the pound yen, it's hard to say how much conviction we have. It's been a bit of a nothing day in the dollar yen, just indecision really. So nothing sort of conclusive to work with there. But we have seen a little bit of pound strength creep into things like the euro pound. We just had a lot of fundamental developments as the days unfolded, with the sackings and the Theresa May stepping down and her final speech in Parliament, and her seeing the Queen, and obviously getting Boris Johnson revealing a little bit about what he's going to do and how he's going to do it, with more information to come. Expect a little bit of choppy ride for the pound. So we'd be bringing it down to this high anyway if that was the case, but the only saving grace we've got, and it's worth staying in this trade, is the fact that we've got the monthly low at 135.16. And we've also got now the pullback to that level. So tomorrow, if we get a rollover below the daily low, then it adds considerably more confirmation that this is definitely still a market we're wanting to stay in. And don't forget how this market has performed is to the downside, but with strong levels are significant consolidation within the move. So that's simply what we're getting at the moment. So we may or may not get taken out of this. It doesn't really matter an awful lot from a monetary perspective or from a stop loss perspective. We were able to mitigate risk on the trade. So we'll just leave it play out with still full expectation for perhaps not initially, but we still anticipate this market lower unless something structural changes for the pound. So the euro yen, we haven't really seen the follow through which we would ordinarily expect. So all that does to us now when we trade these markets is just plant a question mark in our heads when we're trading this market. So because we've failed we're still below the monthly low, so that's really, really important. And we've broken below the low, but the price action has pulled back, like we've seen in a lot of these markets, back to just to yesterday's low. So all that does to us now, if we're talking about the yen, is just put a little question mark in our head. We still expect it lower, and if that's the case, we'll obviously look to stick with it. There's every possibility to see, a good extended move in the yen, bearing in mind the fundamental backdrop. So it's probably not worth getting out of just yet, or even mitigating risk. But if we break a new low tomorrow and these prices extend lower, then we'll definitely be looking to take risk off the table tomorrow with this trade. So bear that in mind. Moving on to the gold market, we still quite like this trade to the upside, believe it or not. So we've just allowed it to pretty much do its thing. There's this sort of upward kind of inner channel just forming in here, so we can see that this is what price is doing here, and what we would look to expect, same around here, is look for this market to actually extend up to these highs up here, which will give us a good positive risk reward. So as long as that's the case, we're kind of comfortable to stay with it. So we're not in the trade yet, but we're very likely to be fairly shortly. Certainly if we break above today's high, then you'd anticipate we'd be back in this market up to the 1450s, up to these highs. So still potentially a good profitable trade in there. So it's really worth leaving for the time being. And the final trade is the dollar CAD. So we've had a little bit of a mini structural failure on the daily time frame. So we've extended lower, we've pulled back. It's quite hard to see. We've made a very marginal lower high, and now we're seeing this little move. So there's your first structural failure, and this is effectively your second structural failure. So at this level, there's a reason or an argument to suggest that perhaps now is not the right time at number one. But at number two, we quite like the complete structural failure of all of this price action. and that's what that would represent, is that next proper move, largely back up to the 32, 36. So we are being quite patient, and this is why we are working with the high and not working with the current price action, because this doesn't fill us with that much confidence. But if price breaks above 31.62, then this is a market we would like to be in, bearing in mind the potential strength that's creeping into the US dollar as well at the moment. So this could then become a decent trade back to the upside. So we'll have to wait and see how some of these markets play out. In terms of other opportunities, the euro dollar is just above really strong levels of support. So that's counterproductive for us to be selling above those levels. The pound dollar, again, today's price action, it doesn't really fill us with confidence. What we want to see is what comes next. Does this market roll back over to the downside, or do we get a breakout of this descending level, and do we get prices really kicking to the upside? So what we've done and what we have here is the beginnings of a structural failure. So same process again, we make a low, we pull back, make a lower high, which is very much in keeping with the downtrend, and then all of a sudden we make a higher low. So this is the beginnings of a reversal from a technical perspective. And now we're interested to see, well, actually, do we get this W formation, and then do we get this little breakout trade? So if we do break above this level and we do end up trading above this particular level in here, then there's your higher probability trade to actually get a decent move. And certainly this is what we'd be looking to trade, hopefully in the very near future, if we get the follow through. It's just we don't have enough information right now. Not an awful lot going on in the dollar yen, just literally moving sideways between 108.80 and 107.20 levels. So we want this market to play itself out. The dollar Swiss has been a very indecisive day. We've been extending lower, extending higher, and back to the middle again. The dollar CAD, similar position. It's really breaking above the 31.60 level, or basically where our entry is currently, the 31.68. That's our no-brainer buy trade. So a little bit of patience is needed with this one. Right, the Aussie dollar, you can see we've had a nice strong pullback. Generally, on certainly daily timeframes, we don't like to trade the pullback, but we do like to look to get involved in the indecisive candlestick, the doji candlestick that normally follows this pullback. So we've had our structural failure now to the upside. That is at this level here. We had a nice strong bullish day, and all we've simply had now is the pullback to what could be the next lower high. So really, we will look very carefully around this sort of price, if that's the price that it gives us, to see if we start making a new high. So the only sort of caveat we have to that is the way that the dollar's behaving. It's a little bit in a strange spot, and it feels like it has been now for a couple of months. So will that continue or not? We don't know. This is actually a good example. This is where we're seeing our structural failure again. We have the pullback making a lower high, and then we have the extended move to the upside. So the one thing we know about markets is a downtrend moves in this fashion, and an uptrend moves in that fashion. I'm sure you're very familiar with it. And that's what we do as technical analysts. We just see what's going on, identify the trend, and look to position ourselves accordingly. And so we're getting this pullback now, so that's really quite interesting for us. So we've got indecision, which is what we want to see. So again, from an intraday perspective, if we break above this level in here, the high around the 67.30 level or 25 level, if we break above that, then there's your high probability trade for these prices to start pushing to the upside. Again, we don't like these lone moves. Lone wolf moves are these runaway opportunities where you're not really seeing any follow through in many of the other markets. It does make us feel a little bit nervous. So it's not the highest of probability trades, but it is. It would be worth looking at. We've had a strong pull back off the high now, so you could argue from a technical perspective there's a little bit more going on here. We can see how this price has behaved around these levels, and what happened in the last 2 or 3 days was quite interesting. We've just hovered around this level, and actually the 89.51 is your no-brainer trade, really, if we didn't have so much fundamental news developments going on today. And generally we wouldn't be, it's not within, and again it all goes back to our I suppose our effective risk management approach, where we're not anxious to be getting in news events that are likely to produce any kind of outcome. If we can somehow stack the news event in our favor, then we can trade it. But when it has the potential to market to respond in any particular direction, it doesn't really stack up for us. So good opportunity from a technical perspective, but we had fundamental and sentiment reasons perhaps not to be that active with it. But it did set up quite nicely on the intraday timeframes. We're going to stick with the pound yen and the euro yen. We still expect these markets lower. There's plenty of scope for the yen to continue to improve for us. The gold market, we really like this market above these highs in here, exactly where our entry level is at the 1431.08. This is why we like working with daily highs and daily lows, is because price has a habit of respecting them. So you can see where sellers have come in the last 3 days, have sold at that level, the 1430. So if we get a break above that, we're likely to see those sellers turn to buyers and look to push price higher. So that's the psychology behind that particular move, because if you're selling and you're currently in a sell position, you wouldn't be too happy with this. You'd be a little bit on the nervous side, which means you're more likely to probably try to get out with it, to get out to the downside if we break above 1430, and it's that move that we want to capitalize on. Okay, so that's gold. So oil, yeah, this is a really choppy market. We had the move pushing higher, which we were thinking, right, well, maybe it's time to start looking at this around the $57 level, and then it started to just move up and move down and not really do an awful lot. And then we had a nice, strong, explosive move up. We wanted to see, and this is a good example where we don't really get the follow through that we're looking for. So, you know, we saw this market just break above the high, and then this pullback makes us feel a little bit uncomfortable. We closed below this level in here, the 56.30 level. We attempted to push higher, but these little bits of price action here don't really fill you with that much confidence, but it did edge a little bit higher, and then we had the rollover trade back to the downside. So we've actually made, in the space of a few hours, we've made a new high in the oil markets, followed by a complete reversal to the downside. So again, it's as a direct impact, of course, of fundamental moves in these markets. So not overly surprised the way that, you know, with how things are developing. So it's just that safety first approach that's always been quite important for us today, really. S&P, we're up at all-time highs now. Again, the all-time high is the 3020 level, and today's market is also 3020. And again, just looking at sort of the more recent price action, we've actually had the majority of the move over the last 2-3 hours, maybe 4 hours there. So it wasn't like we got that move and it was clear cut, you know, during normal trading hours for us here in Europe and the UK. So we do get a lot of that action, and I'd have to say probably over the last year or so, it seems like we've had a lot of what are called late day moves, which is just not great for us, really. So we've got this new level in here. This is now all-time highs in the market. A lot of it off the back of the fact that the Fed are very likely to reduce rates. That's going to be supportive. Also, we have the trade war ongoing discussions. We actually have delegates from the US traveling to China to continue trade war talks. I think it's next Monday. So we're getting a bit of uplift off the back of that. Plus, there's good earnings reports coming out in the US, largely the banking sector today, and generally some relatively positive economic data. So all of these things are quite supportive of price, although we're now in the phase where we're trading all-time highs again, which historically are dodgy things to trade, but we'd have to take out the equities within that because they're artificially supported. So when we look at this price action at all-time highs, there's one major reason for this move over the last. You could go back to 2016. No, you could go back to 2010, 2011. Sorry, let me just sort out the screen for you. So you can go back, and a lot of this is as a direct impact of central bank monetary policy. So being very supportive, printing a lot of money, injecting it into the system. So these prices here are artificially supported, which is why there's a lot of nervousness about the indice markets. Okay, so we've got a few trades that we're quite close to looking at. We've got 4 potential trades now, 2 currently in the market and 2 pending. So we're going to look at these markets and see what opportunities we do get. So so we can literally look to wrap it up there. So if you do have any questions, don't hesitate to let us know. Of course, we can open up the Q&A room, but I'm quite happy to let you guys shoot off if you need to. We've got all the trades that we need to get into. Feel free to connect with us through our social media channels currently up on screen, and we'll take any questions that you may need. So I'll just give you just a few seconds, and I'll be back to you in just a moment. My pleasure, guys. Thanks as always for joining us. We'll see you tomorrow night for Thursday night's live trade room. So we'll see you all tomorrow. So look, thanks for joining us. Do take care. We don't seem to have any questions, which is fine. So hopefully that all sort of makes sense. So we'll see you again tomorrow night. For everyone here, take care. Bye for now.